Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson. What I'm here to do is to get you folks to a place where options just make sense. And I'm going to do that very quickly for you. I've geared all of these videos and webinars to introduce investors and traders like yourself to options. And I'm sure even this old savvy trader can teach the best traders a thing or two. All right. Options can be intimidating, but I'm going to build from real life examples to option strategies that one could implement into a portfolio at any given time. So by the end of all of this, I'm sure you guys will have a solid understanding of options. And my goal is to get you folks to a place where you understand options intuitively. All right, so let's get on with it. Let's look at some economic data. Well, it's a Monday. We really don't have any economic data to speak of. Later on this week, though, we do have some CPI numbers. The ones to really look for is going to be the PCI, which is the personal consumption expenditures. That's going to determine, folks, whether or not we have this transitory inflation aspect to the economy that we've been hearing so much about. Now, something to note, this transitory inflation, that means that it's supposed to come and go. But yesterday we saw Chipotle talk about raising their prices of their food because of higher prices. That is not transitory, folks. When was the last time you saw a fast food chain lower prices, or any kind of business for that matter, after you've seen those prices increase? They rarely, outside of tech, will lower those overall prices to the consumer going forward. So that is not a transitory inflationary aspect. Now, we've talked about this. They're going to start talking about raising interest rates. That really isn't going to, or allowing interest rates to rise, really. I shouldn't say raising interest rates, allowing interest rates to rise. That means they're going to stop the asset purchases. And if we remember yesterday when we were talking about all right, this is going to take me a couple seconds to get used to this, folks, because I have to hit like 5 different clicks to get you guys to see my screen. So let's do that now. All right, so this is a chart of Lulu right now. Not necessarily what I want to talk about. So let's pull up the chart of bonds. So this is actually the 10-year notes. And we've been talking about these interest rates rising. If we were to get a settlement near that high, it was the first time we actually saw the 10-year interest rate go below 1.5%. Now, why would the interest rates go lower as we're seeing this price go higher? Well, that's exactly what I'm talking about. Sorry. That's exactly what I'm talking about with what the Fed has been doing in regards to interest rates. When we talk about asset purchases, folks, what we're talking about is the FOMC. If they're down here, say the FOMC is down here, they're buying assets. That means they're buying the bonds. All right. So when they buy bonds, that means the price goes higher, right? And as price goes higher, that means that interest rates go down. You can think of it as it's like a teeter-totter, folks, as they're mutually indirectly correlated. So as one goes higher, the other inversely correlated, the other one goes down. Sorry. So what we are seeing right now is price going higher right now, which means interest rates are going down. So when the Fed, you hear them talking about buying assets, this is what they're doing to suppress interest rates. Now, when they stop that buying, they stop that support, then one would expect the bonds to start falling off, which means then interest rates start creeping higher. So when we were talking about this whole interest rate aspect to the economy, this is what we're talking about. And this is how the FOMC is artificially lowering interest rates here in this environment. And they're talking about stopping that. So not written in stone, not even been discussed at this point. That discussion is expected to happen later on this year. So with that said, let's get on with the overall markets. And we can see here the Dow Jones Industrial Average is in positive territory after yesterday. Nice move to the upside late in the day. Now, a lot of this has to do with the fact that whole we're talking about transitory inflation. Well, that gave the markets a little bit of a boost. Why? Because it showed that they aren't really thinking about letting interest rates rise here in the here and now, they're still talking about transitory inflation, and that kicks it back to 2022. That's really giving the overall markets a bit of a boost here because the equities like these low interest rates for the companies. And we can see with the E-mini S&Ps in positive territory, the bonds, which I don't have up here, those are the notes, the 10-year notes. The bonds are 30-year, and those are moving higher as well, almost by a full percentage point. Look very similar in aspect. Now, something to note, we have these volume nodes, the volume node and the time nodes in separate places. Acceptance of value at lower levels. We've already seen the time or the volume node shift down there. That means price has been accepted. Now the time moves down. That is a full shift in the paradigm to the downside. And then if we move on to looking at gold futures, they're pretty much unchanged for the most part. Dollar really not doing anything. A lot of people are feeling, it feels like everybody's on a wait and see. We're in these summer markets. They're starting to slow down right now. And this week specifically, not a whole lot of economic data to drive these markets. It's more along the lines of, hey, Fed, what are we thinking these days? But with Bitcoin finally finding a bottom and moving back up to that 3,500 or 35,000, 35, 36,000. I've talked about that. That little range there between 35,000, 36,000 is a sweet spot. I believe we're actually going to see volume and price accepted at these levels, more so maybe than up there near that 70 where everybody was calling for 100,000 in Bitcoin. I think that the comfort zone for Bitcoin is going to be right around this 35, 36, maybe stretch it to 37 area, right in the mid 30s, let's call it, for Bitcoin. I don't have any position in Bitcoin at this point in time, but it very much looked bullish, especially with that confirmation today. Crude oil, it just keeps loving that 70 handle and testing it several times in the past couple of days. Today, though, this topping pattern in the market's really starting to look a little bit overextended to the upside. Now, I've been talking about waiting for an opportunity in this market. I got a little ahead of myself with XOP, and I've added short deltas to that. But if we start looking at crude oil, feeling a little bit of weakness anytime we see these topping patterns like that, that's something that's going to really spark my interest and get me thinking there's a rollover happening, whether it's we've made a new high or we're at a top of a move and then start rolling over to the downside or at a bottom of a move. This so happens to be at the top of a move. So that is something that I'm going to be keeping an eye on here very closely, as I believe that the minimum is slowing down here a little bit. And we're going to see a little bit of a correction, maybe back down to 64-ish. That lines up with the 50-day simple moving average here. So that's why I'm calling out that 54-ish area. And we've got a nice volume node down in around this area where price has been accepted. So it seems like we're really slowing down on this momentum to the upside. And usually what we'll see is a little bit of rollover happening here going forward in that market there. And then finally, the last thing I really wanted to talk about was the NASDAQ, again, real quickly, with the equity markets. You can see NASDAQ has been moving to the upside, was really the catalyst to get the markets turning around yesterday. Now that we're starting to see the banks start making some moves to the upside, and some of these stocks that were getting lost in the sector rotation there, where the banks thinking higher interest rates would help them out, got to move. Now with that on the back burner a little bit, I think they were seeing some weakness there in the market. So banks could have some upside potential here, especially if we start seeing inflation not be so transitory, folks. That means that that's going to speed up that interest rate hawkish cycle, where the Fed goes from being dovish, meaning wants to wait for inflation, to being hawkish and being very in front of inflation there going forward. All right. A couple of things I forgot to mention. One thing I want to know from you guys, comment down at the bottom on what you guys are seeing in and around you in regards to inflation. Is it transitory? Is it not? What kind of inflationary aspects are you seeing? That's going to be really important for all of us traders going back and forth. So not just talking back and forth to me, we will open the discussion down there in the bottom. So please go back and forth. I will make sure that I have any questions from you guys answered. So please do that. Also, smash that like button. It really does help us out. And finally, we got a subscribe button down there. Click on that because you guys will get notifications for these live daily market commentaries. We're going to be doing these more often. So make sure you're on top of it by hitting that subscribe button, and you're going to be the first one let in on these things. All right. That's all I got for you guys. Again, smash that like button or take that. All right. Bye for now and take it easy.